Every year, billions of dollars quietly move from retail traders to institutions, but almost nobody understands how. Every single day, billions of dollars change hands in the financial markets. Some traders make fortunes. Most quietly lose money. And here's the strange part. They're all looking at the same charts, the same candles, the same news, the same economic calendar. So why do the results look completely different? Most people believe Wall Street has a secret, some hidden indicator, a private algorithm, an AI that predicts the future, or information nobody else can access. They're wrong. The biggest advantage Wall Street has isn't hidden. It's ignored. And that's exactly why almost nobody ever sees it. Imagine dropping two people into the middle of the Amazon rainforest. Give both of them the exact same map. One survives, the other doesn't. The map wasn't the difference. The person reading it was. Trading works exactly the same way. Retail traders spend years searching for better information. Wall Street spends years building better decision makers. That's why, when the same opportunity appears, one trader sees a jackpot, the other sees a risk. One presses buy, the other walks away. And somehow, the one who did nothing often makes more money. That sounds insane until you understand how professionals actually think. Here's a question. Why would billion-dollar hedge funds hire psychologists, risk managers, behavioral scientists, and economists before hiring another trader? Because they already know something most retail traders never discover. Markets aren't won by predicting prices. They're won by managing decisions. Think about that. Every retail trader asks, what will the market do next? Professional traders ask, what if I'm wrong? One question chases profit, the other protects survival. And in trading, survival comes first, because you can't compound if you keep blowing up. That's the first piece of the puzzle, but it gets even stranger. There's one principle, used by nearly every successful trading firm, that almost never appears on social media, not because it's hidden, because it's too boring to go viral. And ironically, that boring principle has quietly moved hundreds of billions of dollars for decades. In the next section, I'll show you exactly what it is. And once you see it, you'll never look at the market the same way again. Let's reveal that secret. It's not an indicator. It's not insider information. It's not a billion-dollar algorithm. It's one word. Probability. That's it. Wall Street understands something that most retail traders spend years fighting. No single trade matters. Think about a casino. If you walk into Las Vegas, does the casino know whether you'll win your first hand? No. Do they care? Not at all. Because casinos don't think in hands. They think in thousands of hands. That's why casinos become billion-dollar businesses, while gamblers eventually go broke. Now ask yourself, which one do you trade like? A casino or a gambler? Most retail traders become emotionally attached to one trade. They stare at every candle, move their stop loss, close winners too early, hold losers too long. They need every trade to prove they're right. Wall Street couldn't care less. Professional traders understand that every single trade is just one sample inside a much larger data set. Imagine flipping a coin. If it's weighted to land heads, 55% of the time, could you still lose 5 flips in a row? Absolutely. Could you lose 10? Yes. Does that mean the edge disappeared? No. You simply haven't reached enough samples. That's exactly how professionals think. They don't judge their strategy after one trade or 5 trades. Sometimes not even after 50. Because they know small samples lie. Large samples tell the truth. This changes everything. Suddenly, a losing trade isn't a disaster. It's data. A winning trade isn't proof you're a genius. It's data. The goal shifts from being right today to being profitable over time. That's a completely different mindset. Here's why this matters. Imagine 2 traders. Both have a strategy with the exact same edge. The first trader loses 3 trades. He panics, changes the strategy, starts over. The second trader keeps executing the plan. 100 trades later, the second trader is consistently profitable. The first trader is still searching YouTube for another holy grail, not because his strategy was bad, because his patience was. This is why Wall Street doesn't worship predictions, it worships process. Process creates consistency. Consistency creates confidence. Confidence allows discipline. And discipline is where the money is made. The market doesn't reward the person who predicts the most moves. It rewards the person who survives long enough for their edge to play out. That's why the richest traders often sound boring. They talk about risk, position sizing, drawdowns, probability, things that never go viral, because the exciting parts of trading rarely make people rich. The boring parts do. And there's one more principle that separates professionals from everyone else. It's the reason they can lose millions of dollars and still sleep peacefully at night. Most retail traders can't even lose $50 without questioning everything. That difference might be the biggest edge Wall Street has ever built. There's something strange about the best traders in the world. The more money they manage, the less they care about being right. That sounds ridiculous until you understand what they're actually trying to protect. Imagine you're managing $100 million. Would you risk half of it on one brilliant idea? Of course not. Not because you're scared, because you've learned something more valuable than confidence. Humility. Wall Street knows the market can embarrass anyone. It doesn't matter how intelligent you are, how experienced you are, or how successful you've been. The market doesn't reward ego. It punishes it. That's why the biggest trading firms don't ask one question: how much can we make? They ask something completely different. How much can we afford to lose? Retail traders start with profit. Professionals start with risk. That single shift changes every decision. Think about building a skyscraper. What's built first? The penthouse? No, the foundation. Nobody drives past a construction site and says, "Look at that incredible foundation," because foundations aren't exciting, but they're the only reason the building doesn't collapse. Risk management is the foundation of trading. Without it, every winning streak is temporary. Here's something fascinating. Many hedge funds win less than 60% of their trades. Some barely win half, yet they consistently outperform most retail traders. How? Because they don't need to be right often. They need to lose correctly. That's a completely different game. Imagine losing 5 trades in a row. Most retail traders panic. They double their position, change strategies, ignore stop losses, start revenge trading. Professionals do almost nothing because 5 losses were already part of the plan. Their strategy expected them. Emotion never entered the equation. That's the difference. Retail traders react. Professionals prepare. And preparation creates calm. Calm creates discipline. Discipline protects capital. Capital gives you another opportunity. This is why the greatest traders aren't obsessed with making money. They're obsessed with staying in the game. Because every legendary trader knows the market always offers another opportunity. The only question is, will you still have capital when it arrives? That's the secret. Not predicting the future, not finding perfect entries, simply surviving long enough for probability to work in your favor. Ironically, that's exactly what makes Wall Street look so powerful. It's not that professionals know something. You don't. They simply refuse to do the things that destroy most retail traders. And there's one final lesson. The lesson that quietly transfers billions of dollars from impatient traders to disciplined ones every single year. Once you understand it, you'll stop asking, "How do I make more money?" and start asking, "How do I stop giving it away?" Here's the irony. The people making the most money on Wall Street often trade the least. That doesn't make sense until you realize they're paid for patience, not activity. Think about a sniper. Does he fire every time someone walks into view? No. He waits. Sometimes for hours, sometimes for days. One shot, one opportunity, mission complete. Now compare that to the average retail trader. They wake up, open TradingView, and immediately feel the need to do something. Anything. A trade, a scalp, a quick position. Because doing nothing feels like falling behind. But the market has a cruel way of punishing unnecessary action. Every unnecessary trade adds more risk, more emotion, more commissions, more opportunities to make mistakes. Wall Street understands something that social media never teaches. Cash is a position. Doing nothing is a decision. Patience is a strategy. Imagine a fisherman. Would he throw his net into every puddle he sees? Of course not. He waits for the right water, the right conditions, the highest probability. Professional traders think exactly the same way. They don't trade because they're bored. They trade because their edge appears. Nothing more, nothing less. This is why many hedge funds can go days, sometimes even weeks, without making meaningful changes. Not because they don't know what they're doing, because they know forcing trades destroys performance. Retail traders hate hearing that, because activity feels productive. Checking charts every 5 minutes feels productive. Watching 10 YouTube predictions feels productive. Moving stop losses feels productive. None of those things necessarily make money. Execution does. Imagine two lumberjacks. One swings the axe all day. The other spends half his time sharpening it at sunset. Who cuts down more trees? The answer hasn't changed for hundreds of years. Preparation beats effort. Precision beats speed. Quality beats quantity. And that's exactly why Wall Street spends so much time waiting. Because they know there's an enormous difference between being busy and being profitable. Here's something even stranger. The best traders don't measure success by how much they made today. They measure success by whether they followed their process. If they executed perfectly and still lost money, they consider it a successful day. If they broke every rule and somehow made money, they consider it a failure. That mindset is almost impossible for beginners to understand. But it's also the reason professionals survive for decades, because eventually the market rewards discipline, and eventually it punishes luck. That's the invisible transfer of wealth. Money quietly moves from impatient traders to disciplined traders, not because professionals are smarter, because they're willing to wait when everyone else feels the need to act. And that brings us to the final piece of the puzzle. The one lesson that ties everything together. The lesson that explains why some traders quietly build fortunes, while millions of others spend years chasing the next secret. So, what is the real Wall Street secret? After everything we've covered, probability, risk management, patience, discipline, it turns out there was never one secret. There was one way of thinking. Wall Street doesn't win because it predicts the future. Wall Street wins because it survives uncertainty. That's the difference. Think about every market crash in history. Black Monday, the dot-com bubble, the financial crisis, the COVID crash. Countless traders disappeared, but the greatest firms were still standing, not because they knew the crash was coming, because they built businesses that could survive if it did. That's the mindset retail traders rarely develop. They're always asking, how much can I make? Professionals ask, how much can I survive? Because survival creates opportunity. Opportunity creates consistency. Consistency creates wealth. Imagine planting 2 trees. The first grows incredibly fast. Within months, it's taller than everything around it. The second barely seems to grow at all. People walk past it every day, thinking nothing is happening. But underground, its roots are spreading, deeper, stronger, wider. Then one day, the storm arrives. The first tree snaps. The second barely moves. Trading works exactly the same way. Most traders are obsessed with growing the branches. The professionals are building the roots, discipline, risk management, patience, process, emotional control. Those things don't look exciting. Nobody posts screenshots of following their trading plan. Nobody goes viral because they respected their stop loss. Social media rewards excitement. The market rewards consistency. Those are 2 completely different games. Here's the irony. The secret everyone searches for is hiding in plain sight. It's so ordinary that most people ignore it. Protect capital. Wait for your edge. Accept uncertainty. Follow the process. Repeat, year after year, trade after trade. That's how fortunes are actually built. Not with one brilliant prediction, but with thousands of ordinary decisions made extraordinarily well. One day, people will look at successful traders and call them gifted, lucky, naturally talented. They'll never see the years spent doing boring things when nobody was watching. Because greatness almost always looks boring while it's being built. So stop asking, what indicator does Wall Street use? Start asking, how does Wall Street think? Because indicators change, technology changes, markets evolve, AI becomes smarter, strategies come and go, but the mindset that has quietly created wealth for over a century has never changed. That's the real secret. Not hidden, not exclusive, just ignored. And the moment you stop chasing shortcuts and start building that mindset, you stop thinking like someone trying to make money from the market. You start thinking like someone who deserves to keep it. If this documentary changed the way you look at trading, subscribe. Because on this channel, we don't chase hype. We study timeless principles, the psychology behind elite traders, and the lessons that continue working long after every new strategy has been forgotten.